The following segment is sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp. Is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Oh, it's great to be back.
We're happy campers over the last week or two with regard to silver. It's leveled off a bit today, but onward and upward by the end of the year.
Yeah, I've been looking for 35 to 40 by the end of the year, and it looks like we're, well past the 33.5 mark already, and I think it's going to accelerate. I think there'll be some back and forth here. There was a resistance level around the 32-ish area. We're through that, but usually on these kind of moves, it tests it. So in other words, it may come back in the 32 range and hopefully bounce off it to the upside. If it does that, that's pretty good confirmation that we're going to go higher in the near term, and that's pretty much what I expect.
Do you expect money to open up for some of these juniors that are trying to get financed in the silver space?
Not right away. I do expect it if this continues. In other words, most of these financings take place in a rather warm to hot market, and for that to take place, they're going to need proof that this thing is for real and the prices are moving higher. So, yes, eventually, but for right now, I think it's still pretty difficult for a lot of these companies to raise funds.
So a lot of institutional fence sitting?
Primarily, there are more aggressive funds than others, obviously, and a few of those are, jumping in right away. In fact, some have gotten on the silver and gold side, in other words, the ETFs or hopefully the physical, in a lot of cases the physical. A lot of these hedge funds have seen the light, so to speak, where they have gone from the paper silver and paper gold investments into the physical. It's more difficult for a fund to do that. It's very easy for a fund managing $200 million, $500 million, whatever it may be, to click a mouse and buy some SLV or GLD or sell it if they need to or whatever. I understand that, but it's really not a physical hedge. And a lot of these guys have actually come to the realization that it's time to get real, and so they've taken their SLV and GLD or others, similar type of paper, silver, and gold investments off, taken that cash and rerouted it into physical metal, and that's only helps the market.
Can we see some acquisition attempts by some of the majors and mid-tier companies right before the junior mining stocks head north?
I definitely believe so. Jim Paplava, myself, and others have stated that you'd see it coming more and more, and we have seen quite a bit of it, and we'll continue to see it. In fact, there's one on our list that I think is very ripe picking as a takeover candidate. It hasn't happened yet, and it's just a guess on my part. I have no inside information, but a lot of these that are undercapitalized, goes back to your previous question, this company tried to raise money. It's in a great area. It's in a geopolitically safe area. It's in a district that is world-renowned. Everything about it really lines up well, yet it's extremely undervalued, and they couldn't raise funds. So based on the market capitalization of the company, what the company would sell for if you bought all the stock right now, it's, again, very undervalued. So that's one that I would think, sooner. I thought immediately when I put it on the list that it was a buyout candidate and was far higher then than it is now. So does that mean I'm right? No, it doesn't. But what I am stating is, yes, there will be more in the junior space and in the mid-tier space. These bigger companies like your Newmonts, Gold Corps, and those type of companies really produce a lot of gold on an annual basis, and for them to go out and just explore and find more is prohibitive. They just can't do it, so they much rather find an asset that's already known and maybe has some upside potential for finding more, maybe not, but if they can buy it at the right price, that's usually what they do, and that's exactly what you're saying, Alice. They go in, they buy it, and the people that own that particular company usually are rewarded in two ways. Normally they're bought out at a premium, and sometimes they're bought out at a premium with stock. In other words, you're getting stock from a mid-tier company to a top-tier company, which in a lot of cases is advantageous, not always, but in a lot of cases it is.
Well, if we're not already a shareholder in that sort of company, what's your advice? I know I'm walking a fine line here when I ask that question.
I think now is the time for everyone that's in this space to take a hard look at what they own and ask themselves, stock by stock or company by company why you own it. And if you didn't own it, would you own it now? Would you buy it now? Because what happens is a lot of people get married to a certain stock or certain company because of the story or where it's located, or the brother-in-law bought it, or it's the lowest one they could find, or it's got to move sooner or later, or lots of reasons. Really, you want to be able to sell the losers and keep the winners, and that's opposite of what most people do. Most people have some rationalization as to why they're going to keep their dogs and sell the ones that actually are doing well. They feel better because they're taking a profit, but it's really better investing to take the ones that really don't serve you and cycle that money, even if it's at a loss, into a better company. So I would suggest that, and I'd also say that most people over-speculate. In other words, they have too many exploration type of companies or juniors that are going to come into production years out, like 4 or 5 years out. We might be through the cycle 5 years from now. I don't know. I think we will be, actually, but I could be wrong. So if there's something that's really going to be a pretty good producer, but it's going to take 5 years from now for it to get to that point, you can own it, certainly, but don't bet a lot on that type of situation. You want to be in the sweet spot. The sweet spot in this part of the cycle is to be in the top tier juniors that are producing or very near production, and the mid tiers that have a lot of growth potential. That's the sweet spot. Those are the ones that are going to get the most bang for the buck, generally speaking. Are there exceptions? There's always exceptions to this, but to find exceptions is very, very difficult.
We'll be right back. The Ellis Martin Report is sponsored by El Tigre Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. Silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com. And we're back. Do you get involved in any early-stage exploration plays?
I do. There's one I've done for years and years and years, and quite frankly, I still own it. It's McMillan Gold. And frankly, they have decent projects. I've been on them. I've walked the projects. One of them is the one that was Western Copper, that was Western Silver and bought out. It's right next to that project. It's similar. It's a highly disseminated, lot of it type of situation. But this is one that, by this point in the cycle, they should have really progressed the company further along than they have. There's really nothing wrong with it other than it's just taken too long. So a lot of those type, and there are several out there like that really haven't progressed as rapidly as their competitors. And it is a free market in some ways, not totally, but in some ways the exploration side is a pretty free market. So they're competing against companies that really got with it or was able to find funding or whatever. So yeah, I do it occasionally, and quite frankly, also it's not an area that I've done well in the last couple of years. If you go back to when I started like 12 or 13 years ago, and you look at the ones that I had on there, well, Western Copper as an example, we had that thing like under $1, and that thing went with a 10-bagger that was bought by Glamis, that was bought by Goldcorp. So certainly a huge winner. And I had several like that, actually, but the last few years I've shifted because I know the cycle, the market cycle is going from these juniors explorations that get big lifts, even some that don't deserve it, and then it goes into the mid-tier where you really have to have the actual goods and you have to be bringing them to the surface to get a real upside into your stock. So that's where we're still at.
Do you ever sell those so-called possible losers low? Do you ever sell low?
Yeah, I've sold out low. I mean, usually I've got a trailing stop in the general, how to use our suggestions, and it talks about putting a stop on them when you get in, because I can't get everybody in at the same time because, we're always getting subscribers that come on board and those that drop off. So, they take a look at the list, that thing's up, 30% already. Should I buy it? And you can, if there's a buy on it, you could, but you want to put a stop on it. I mean, the best thing to do is to get in it. And then some of these, if they're in this rank speculation section where you should only bet money you can afford to lose, then it's kind of your call. In other words, you could put a stop on it, which is probably the smartest thing to do, but these things move so widely up and down, and they're such small market cap stocks that you can just, if you actually did put in money you can afford to lose, what you can do is just hold it. And you should sprinkle it out. In other words, you should own one, you should probably own 5 as a minimum. If you want to hold it for a while, until tax loss selling or whatever your particular individual case is, you can do so. That's what I tend to do. I really stress, again, the mid-tier is pretty much to make solid money. And of course we like to speculate. The ones that we speculate in are well researched. I mean, I think we've got 1 or 2 losers right now as far as when we started with them. Overall, we're doing well, and we'll drop them off. I mean, there's times that it's obvious that we've made an error, and we admit it and say we've made an error on this company. This has happened or that hasn't, or we thought this or that, and it's time to get rid of it and replace it with something better. So yeah, we pretty much, as Warren Buffett says, we eat our own cooking. In other words, and people often ask, well, exactly what are you doing? Well, the Morgan Report is pretty much what I'm doing. It's not precisely, but it's very, very close.
And to become a follower of David Morgan, the Silver Guru, and the Morgan Report, what do we have to do?
The easiest way is it's all internet-based, so just get on the internet, and that would be www.themorganreport.com, all one word, themorganreport.com. And if you're not sure what you want to do, there's 3 videos on the different levels of service, the basic, intermediate, and advanced. On top of that, you can just get on our free email list, and you can get weekly information on the macroeconomic picture, sometimes on silver or gold. Sometimes we put a comment in there. And we don't bombard people daily, sign up, sign up, sign up. I just don't believe in that. It's once a week. It usually comes out Saturday or Sunday. It's a casual read. And we also collect usually the interviews like this that I do during the week, so people don't have to search all over the internet to find them. So it's kind of a neat, tidy way to just get pulsed once a week, and you can get kind of everything I've done during the week in the public domain sent into your inbox, and then you can, during the rest of the following week or whatever, you can listen to an interview 2, 3, whatever you wish.
David, as always, it's a pleasure to speak with you. Have a great rest of the week. Thanks for joining me today on the program.
Thank you, Ellis.
I've been speaking with the Silver Guru, David Morgan. His website is themorganreport.com. Listen to this segment again on the podcast page of our website, ellismartinreport.com.